Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 7th of October 2019, so welcome everyone. Welcome to this Monday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff, so I hope you have your coffees ready. But as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page here, which you can also check out on a daily basis. And yep, a lot of useful stuff here could be found. So yep, feel free guys to visit us here on jfdbank.com. So but for now, let's jump into the charts. Now, the first one I want to touch on here is the DAX, so the German index. I talked about this one last week on Friday, and basically what I was saying that what we are expecting or could be expecting right now is a potential maybe correction, because last week the index was kind of selling off heavily here. It managed to clear some of its key areas of support, and the first important one was of course this 12,140.41 area, and that was marked by the low of the 25th of September, and then continued to drift south and dropped below its 200 EMA here on the 4-hour chart. So and the index reached an area near the 11,880 zone, so from which it kind of reversed back to the upside. And looking at the cash index right now, we can see that the index is currently around the 12,000 barrier, so just maybe slightly above it. So again, we are kind of hoping to see a bit of correction here, but again, this correction to the upside could be limited due to the 200 EMA here on the 4-hour chart, or even this 12,141 zone again. So, but of course, for us, the more important level will be around the 200 EMA here on the 4-hour chart. So we'll keep an eye on this one. For now, yes, we are looking for a bit of correction. But let's say if the correction doesn't happen and we see a slide straight away, the area where we are gonna get comfortable with further declines, and we will only consider further declines if we see a drop below the 11,880 zone, basically the lowest point of last week. This way, the index would confirm a forthcoming lower low, and we could target areas like the 11,778 zone, marked by the inside swing high here of the 27th of August, or we could see this one drifting further down here, potentially maybe testing the 11,573 territory. But for now, guys, keep your eyes on this one. Keep your eyes on a potential maybe correction here a little bit. Let's see if that happens. If it does, then yep, we'll take it from there. In terms of the upside, again, in order for us to start considering higher levels, of course, ideally, this is the level that we're looking out for. That's a break of the 12,500 zone, but or should I say 12,493 area, approximately around there. But of course, I do understand that it's quite a big of a move here to miss out. So in a way, we'll start looking at maybe slightly higher levels if we get a push above the 12,142, 42 zone, approximately around there. Then yep, we will aim for slightly higher levels. The only thing is that guys, in here, of course, don't forget that we also could travel a little bit higher, maybe test the 12,312, and then reverse back down. So also always have your stop loss in place. And in this situation, if you decide to target higher levels after the 12,142, then have a tight stop loss just in case this suddenly reverses, and it could do that. So keep your eyes on this one, guys. For now, it's a very tricky situation here in the equity markets. I mean, yes, on one hand, you have the kind of diminishing risk on environment, but to be honest, it's not really the risk off environment in full swing yet. So that's why it's a bit of a, like I said, it's a bit of a tricky one here, and it's not ideal, but we'll try to squeeze something out of it. And like I said, keep an eye on those levels that I just mentioned. WTI Oil. So I talked about this one last week as well, and this is what I was saying, guys. And from the video, the Trader's Tea Time that I've done on Friday, I've slightly adjusted here a few levels. So just to kind of to be more accurate, I would say even. But basically, the long story short is the fact that yes, last week the commodity WTI oil continued to drift lower. It was trading still below this downside, tentative downside resistance line taken from the high of the 16th of September, and it did have an attempt to break that, but failed to do so, and it drifted kind of back down. But today, this morning already, it is kind of trying to make its way higher. Now, again, soon probably this downside line is going to become invalid, and what we're going to focus here more on will be some of these key areas of support and resistance. So basically on the upside, if we get a push above the 53.33 area, approximately around there, that's basically the high of Friday. If we get a nice push above this, then yes, it increases the chances for a further move higher. You can see that I've drawn the arrow all the way here towards the 56.84, 85 territory, but up until that, kind of, it could hit the well, it could probably hit and stall near the 200 EMA here on the 4-hour chart. So that's why, even though I do have my target here around the 56.84, still, if we see a push above this 53.33 territory, then keep an eye on this 54.73 zone, which is the low of the 27th of September and the high of the 1st of October. But if that fails to withhold, yep, then we'll aim for this 200 EMA. So for now, guys, that's the situation. Of course, don't get me wrong, I'm not saying that this is going to start moving higher here, but the fact that it has been on a steep, kind of on a decent decline, let's put it that way, since around the mid-September, after that spike that we had, the Saudis oil refinery attack. And then from there onwards, kind of, it continued to drift lower. And of course, now the big question here is which way this will break. For now, it seems that you could try to do a move higher here, but again, don't get me wrong, it's still not. We still need that confirmation break. So if, let's say, this suddenly reverses to the downside and drops below the 52 points, well, around 52 zone here, and that's basically the low of Friday last week, then we will aim again to the downside. The only thing is that we're not going to drift, or we're not going to drag this one too much to the downside, because we're going to aim only for the 50.63 territory around there, which the commodity kind of failed to reach last week. So we'll aim for this 50.63 level again, because as you can see previously, that acted as a fantastic area of support, starting here from the 5th of June, and it kind of maintained the price above it. So again, we will consider that level only if we see another drop here below the 52 zone. So keep your eyes on this one. Quick mentioning of gold. Not going to spend too much time on it. So last week I was talking about this level right here above the 14.95. So I mean roughly around there. So we had a nice pop above it. It drifted higher. At one point last week it managed to reach the 1520 zone, approximately around there. Maybe just not exactly hitting the 20, but near it, very close to it. So in a way, what we could have a look at here is, and let me just adjust a few levels here very quickly. So basically, as you can see by the arrows here, that we could be seeing something, maybe another push higher. The only thing is that if the commodity, if the precious metal struggles to push above this downside tentative, short-term downside tentative resistance line taken from the high of the 4th of September, then we could see another round of selling here. We could see something like this. So the first arrow here is for the more riskier ones. Of course, in this situation, you need to have your tight stop loss just in case this suddenly reverses sharply to the upside. But for those who are more on the cautious side, you could in a way wait for a drop below the 14.95 zone again and then aim for slightly lower areas. Also, just kind of something to keep in mind, guys, here is the reason why we're looking at the downside here is because we're still within this nice kind of falling channel formation here, and in a way, as long as it remains within the boundaries here of this channel, we will continue kind of aiming to the downside, I would say. But again, be very careful. Let's say if suddenly this upper side of the channel here, this falling channel breaks, then yep, of course, this could lead to a change of trend, and we could see this one pushing back to the upside again. So of course, we'll aim for the 1557 level here. That's the highest point of September, and then we'll take it from there. For now, that's the situation here on gold. Keep your eyes on this one. Even let's say if we get a nice rebound from here somewhere from let's say today's pivot, then still it could get held near this upper side of the falling channel. So keep your eyes on this one. And as I said, for those who are more on the cautious side, you could in a way wait for a drop below the 14.95 before examining further declines. Ripple, not gonna spend too much time on this one, but having a nice pop this morning. I just wanted to quickly kind of update you on this one. So I haven't looked at this one for quite a while, and basically now after it slid here, after the mid-September slide here, or I should say after the mid-September when it hit the high, and that high was near, let me just quickly put this one here, near the 0.3273 area, it kind of drifted south and heavily to the south, and managed to reach an area near the 0.2126 zone. So from which it kind of rebounded, and now it's trying to make its way higher. For now, it seems that it could do exactly that. It broke above its key area of resistance near the 0.2630 zone, and now we could see a bit more upside. The only problem here is that the upside could be limited due to this downside resistance line, and a bit of a tentative one. I do understand that, but nevertheless, we're going to keep an eye on it because that's the high. The downside line is taken from the high of the 22nd of June, and this medium-term downside resistance line, and we could see the price stalling around here initially, but of course, if the bulls find this as a temporary obstacle, then yep, a nice good break above it could, in a way, open the path back here towards the 0.3273 territory or even higher. But again, for now, let's keep it short and simple. If this, given that it broke above this 0.2630 zone, we will aim for this downside resistance line, and that's taken from the highest point of June this year. So keep your eyes on that one. In terms of the downside here, if this suddenly, let's say, starts falling below this little area right here near the 0.2425, then yep, we will aim for the downside again, maybe even going all the way here back towards the 0.2126 or even below that. But again, for now, keep your eyes on these two levels. NZDUSD, quick mentioning of this one. I talked about this one recently as well, and basically now it is, of course, pushing above this downside resistance line. So it did already that on Friday, but as you can see, it failed to kind of move further north. So for now, what we could do here is, in order to get slightly more confident with higher levels, and I do understand that I did have this level right here, the 0.6327 territory, as the potential kind of breakout point. The only thing is probably that's going to get raised right now because I'm going to remove this level. So for us now to start looking at higher levels, ideally we would like to see a push initially above the 200 EMA on the 4-hour chart, and probably that would be the level around here, marked by the high at 25th of September, and that's around the 0.6349 zone, something like that, approximately around there. And of course this would place the rate above the 200 EMA on the 4-hour chart, and we could then aim for the 0.6362 or even this level right here, the 0.6396 zone, and that level previously acted as a good area of resistance and support here in around mid-September. So we'll initially aim for that, and then we'll take it from there, see what it wants to do. Of course, our main target is going to be around the 0.6445 zone, approximately around there, but let's not get ahead of ourselves too much. First, let's see what it wants to do with this 0.6349 zone, and let me just actually put this highlighted area right here, because probably that's going to be the more important one to watch. So keep your eyes on this one. In terms of the downside, of course, as you probably follow me now, we need to see a drop below this downside line, and we would like to see a drop below the 0.6280 zone just for that extra confirmation, and then we will aim for lower levels, maybe even going all the way back here towards the 0.62 territory. So we'll keep an eye on this one. For now, it's still above this downside line. It still has a little bit more chances for this one to drift to the upside. The only thing is that just for that extra confirmation, we'll wait for a push above the 0.6349 zone. USD-CAD. USD-CAD is quite interesting. I talked about this one on Friday, and basically on Friday after the NFPs, we did have a slide lower, but what I was saying, that even if we see a close of the 4-hour candle below this barrier here, still we may see something like this, where the pair could reverse back to the upside and stay above this 1.3310 zone I talked about. So I was looking at this as a potential area, a nice bouncing ground. So for now, even though we did have a break and a close of a 4-hour candle below this, the daily candle never closed below this. So in a way, it kind of, on a daily chart, you would see here a nice false breakout, and still the daily candle kind of closure was above this 1.3310. So in a way, it kind of supports the idea, the initial idea of seeing something like this, where it could curve up here and drift to the north. We could initially aim, of course, for the 1.3347 zone, but if that fails to withhold, then a break of it would confirm a forthcoming higher high, and we could aim for the 1.338283 zone. So, and that's basically the high of the 3rd of September, for basically the highest point of September. So for now, that's going to be our target, especially if we see a push above the high of last week, near the 1.3347. So keep your eyes on this one. If this suddenly starts dropping lower, again, I'll stick to the same idea here for us to examine further declines, or at least I should say short-term declines. A drop below the 1.3278 zone would be needed before aiming for these slightly lower levels. So keep your eyes on this one. GBPUSD. GBPUSD is a tricky one, because on one hand, we are still trading below this downside resistance line. This is a bit of a tentative one. I do understand it's not really kind of ideal here. We could in a way draw this one from here, from this high, from the high of May. Well, we actually can do this, because to be honest, all these lines are now tentative, and it's not really something that to stick to too much. It's probably mainly where we're going to look at here are levels. So in order for us to consider slightly higher levels, a push above the 1.2411 zone here would be required. This way, the pair could in a way open the path for itself towards this key area of resistance near the psychological 1.25 level. And by the way, this is where also it could hit this tentative short-term, or I should say medium-term tentative downside resistance line as well. So for now, like I said, in order to consider the upside, we'll wait for a push above the 1.2411 zone, and then only then aim for slightly higher levels. But again, the upside could be limited due to this this level right here and this downside resistance line. If it gets broken, that's wonderful. We could see more buyers jumping in here and potentially pushing this one towards the high of September, and that was approximately around 1.2582 zone. So keep your eyes on that one as well. In terms of the downside, if this suddenly drops below the 1.2274, 75 zone, yes, it could in a way drift further down here. Initially, we'll aim for the 1.22 area here. That's basically near the lowest point of last week. But of course, if that gets broken, now this is where more sellers could start joining in, because this would confirm a forthcoming lower low, and we could drift further south here, and potentially, of course, we could start targeting again this little low here near the 1.1957. I do understand it's quite a big of a move here. That's our kind of perfect target, I would say. But up until then, I mean, if we see a drop below the 1.22 zone, then keep your eyes on this little area right here. Let me just quickly put this one on the chart. That's the little low here of the 30th of August, and that's around the 1.2137 zone. So this could be our initial target if we see a drop below the 1.22 zone. But as I said, we'll start considering the downside here below the 1.2274, 75. But again, like I said, we will be very careful here. This is kind of the similar situation where I'm going to say that we will have a very tight stop loss, because it could find support somewhere in between here and reverse back to the upside. So that's why this level here, the 1.22 zone, is kind of the more interesting one in terms of further decline. So keep your eyes on this one. Euro USD. Now, the messy Euro USD, last week I've talked about this one, and what I was saying, that if we get a push above the 1.0964, then yes, it increases the chances for this one to drift higher. It did try to make its way higher, but kind of failed to move above this level right here. And let me just put this one on the chart, near the 1.0999 zone. So basically, it almost managed to hit the psychological 110 zone and failed to do so, and then reversed back to the downside. So, and to be honest, let me just clear this chart a little bit, because this is a bit of a too many lines here, guys. So in a way, what we could do here is, now we'll keep an eye on this psychological 110 zone. With this, if this suddenly starts sliding back below the 1.0943, then yes, we will aim for slightly lower levels. We'll aim for the 1.0904, or even going further down. Again, for us to, let's say, examine, let's say, deeper extensions to the downside, ideally we would like to see a drop below the 1st of October low, and that's near the 1.0878 zone. We would like to see that drop. It's right here basically, but of course up until then we could be missing out a bit on a few moves here. So in a way, what you could do here is, like I said, start looking at lower levels if we see a drop below the 1.0943, and then we'll aim for these lower areas, as I said. So in terms of the upside here, well, given the proximity now to this downside resistance line taken from the high of June, ideally, to be honest, it's very difficult. Yes, we could maybe see a rebound, and we could see a push. If we get a push above the 1.10, then yes, there is a possibility to test the downside resistance line. But the only thing is that it's going to be very close here. It's about 20 pips, and that's why probably keep an eye on the 1.1024 area here. Now, if we get a push above this, this would also place the rate not only above this downside line, but also above its 200 EMA on the 4-hour chart. And we could see this one opening the path for itself towards the 1.1075, or even above that. And the 1.1110 zone could be a nice, good potential target, because that's the nice high here of the 13th of September. But again, this is the level that we're going to be keeping an eye for, and that's for the upside. And let me just quickly put this one on the chart. There we go. So that's probably the level that we're going to stick to, because like I said, at this point it's very tricky. It's still below this downside line, but it's very close to it. So a nice good pop above this area right here, and above the 1.1024 zone, could in a way do the trick here for more buyers. Okay, guys, I really hope you found it useful. I do apologize for running a little bit over my time. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my Traders Tea Time, as always, that's 13:15 GMT. For now, I hope you have a wonderful trading day, guys, and I'll see you later. Thank you very much, and bye-bye.